Minister of Industry and Trade, Mr. Riyad Mansour, has implemented the African Continental Free Trade Area, says it's a continuous process, not a one-off event, requiring patience, strategy, and diplomacy. The minister said this when he addressed journalists during the 57th session of the Economic Commission for Africa held in Addis Ababa. The conference is with theme advancing the implementation of the agreement establishing the African Continental Free Trade Area, proposing transformative strategic actions. He said transformative measures are vital to advancing AfCFTA implementation and promoting economic integration across the continent. Executive Secretary of the United Nations Economic Commission for Africa, Mr. Clave Gatete, noted that declining global investment and aid emphasized the urgency of promoting intra-Africa trade and investment. Meanwhile, the Lagos State Internal Revenue Service has given March 31st ultimatum to file annual tax returns or face penalties for insubordination. However, the process of filing seems more of a Herculean task to some taxpayers as they are misinformed on the processes involved. The special advisor to the executive chairman of the LRS, Mr. Abidin Kande, was live on our Business Nigeria show where he speaks more on what they are doing to make it seamless.
So for those people that now, because essentially what we have in Lagos since 2019, and then in 2021 when we said don't file to us again except electronically, we know that there's a wide spectrum between those in terms of our ability to use the ICT things and then also our knowledge. So you have challenges along that. In all our tax stations, we have help desks. On our social media handles, we have people you can also contact, and then we have customer service center as well that can take calls from you, FOC, free of charge. That is, it's the line that you call that you don't get billed on, and they can take you step by step. Also on our e-tax platform, we have a chatbot that tells you what to do if you get stuck. So those are all the things that we have made available to people. So if people now still claim that they are not able to, then I think the law says that there are penalties for you for not filing, and those ones we implement them.
Well, Asian shares urged up today after a Wall Street rally as investor sentiment was lifted by prospects that the Federal Reserve could still deliver 2 rate cuts this year. Though the gains were limited by pullback in Chinese equities, Australian shares jumped 1%. While U.S. futures also extended their rally after the cash session ended on a high. Nasdaq futures ticked up 0.62%, S&P 500 futures advanced 0.46%, but stocks in Europe look set to open lower, with Eurostock 50 futures down 0.07%. FTSE futures is in 0.15%. Trading was steamed, with Japan's market closing for a holiday, though Nikkei futures edged up 0.3%. However, the buoyant mood failed to drive a broader rally across Asia, with MSCI's broadest index of Asian Pacific shares outside of Japan up marginally 0.2%. That was due to a slide in Chinese equities, with benchmark indexes in mainland Chinese and Hong Kong falling per in some of those losses. The CSI 300 blue chip index was last 0.63% lower, while the Shanghai Composite Index is 0.3%. Hong Kong Hang Seng Index fell roughly 1.5%. And the Federal Reserve kept its benchmark interest rates unchanged, but still expects to cut rates twice this year. According to the Federal Reserve's chairman, Jerome Powell, the economy is expected to grow slowly this year and in 2026, while unemployment rate will go up. The Fed's chairman added that there are signs that tariff may have increased the cost of imported goods, noting that inflation goal of 2% might take longer to achieve as a result of the tariffs.
My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The economy is strong overall and has made significant progress toward our goals over the past 2 years. Labor market conditions are solid, and inflation has moved closer to our 2% longer run goal, though it remains somewhat elevated. In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged. We also made the technical decision to slow the pace of decline in the size of our balance sheet. Surveys of households and businesses point to heightened uncertainty about the economic outlook. It remains to be seen how these developments might affect future spending and investment.
Meanwhile, China's central bank decided to keep its lending rates unchanged. Beijing moves to prop up growth and stabilize its currency amidst trade frictions. The decision follows the U.S. Federal Reserve's benchmark interest rates moderation. However, U.S. federal officials have indicated a likely 0.5 percentage point of rate to cut through 2025. The People's Bank of China held a one-year loan prime rate at 3.1% and a 5-year rate at 3.6%, where they had since been a 0.25 percentage points cut in October. It has since kept its 7-day rate and maintained the country's policy rate at 1.5%. Meanwhile, China is trying to hold off on easing too soon as the yuan facing downward pressure from the global financial uncertainty.